It's time to have an intentional conversation at depth. I'm Ben Rodgers, and this is the At Depth podcast, where we explore the through lines that connect what we value to how we build business and how we invest. Each week, you'll hear from entrepreneurs of every kind, from small business startups to multi-generational companies and everything in between. As we explore ideas together, we're going to get below the surface, because it isn't just about what we build, it's about why we build it. Here we are at the At Depth podcast. We've got Marc Bathgate with us today of 7-2 Partners, and was it Distilled Ventures?
Distilled alternatives,
Distilled Alternatives.
not a liquor alternative.
No, but like at some point in this conversation, we're going to talk about distilled things in a more literal way. I'm excited to get to hang out with Marc today. And I met earlier this year at his own ski event up in Vail. We got to be there with some other neat investors, some fund managers, just a lot of very fascinating, interesting people. Marc's got a lot of interesting ideas, capability to go deep. So that is also very helpful to be on a podcast called At Depth with a guy who knows how to get a little bit further than like 2 feet down. And so Marc, jump in there. Introduce yourself a little bit to everybody. Don't get too long-winded, but just let everybody get to know you a little bit.
I thought I was supposed to stay here and just hold my breath. Isn't that at depth?
That's what you do. You just at depth, you hold your breath.
I think we have a breathing apparatus. Like you said, 7-2, father to 4, live in Park City, Utah. Been in the alternatives investment world for 17 years. Grew up in a microcap investment banking household, so I've been around growth stage companies my entire life. Started Distilled out of my prior firm in 2020, which was to continue what I've been doing, which is investing my own money and finding niche alternative strategies. And then we set up 7-2 with my 3 partners 2 years ago. And now I have $3 billion in assets under advisement and 22 core clients. So I spend 40% of my time with investment managers, another 40% with investors and clients, and then the remaining 20% running the business and doing other things that you need to do. Somewhere in there, running the homestead and chasing my 4 kids and helping out with the school that we co-founded here in Park City.
And under the surface, too, there are malted beverages of a wide variety being consumed at varying degrees, correct?
Not just malted. I have distillates of a wide variety, mezcal, whiskey, and other things. But as my brother said recently at a family reunion, I think your palate runs to the novel, Marc. I was like, yeah, that's right. I like things that are different and new. So I have probably 450 bottles, 425 of which are unique. And they're basically all unicorns. And when you first get a unicorn, you're like, oh, protect the unicorn. Don't drink the unicorn. And next thing you know, when you have a whole herd of them, it's like, meh, let's just cook with that one. Yeah.
I make bourbon baked sweet potatoes for my teetotaling side of the family as a tongue-in-cheek sort of moment. And they all love it. And they all acknowledge that the aftertaste of cooked off bourbon is superior on a sweet potato. So
I believe that. I'll have to pull that one on my teetotaling mother-in-law. She wouldn't mind. She just doesn't like the taste of alcohol.
the sweet potatoes is the way. It's the way you get people to accept it. Well,
All right, we need to drop that recipe into the show notes, and because I need it.
get your checkbook out, buddy, because it's...
All right, you have to subscribe to the Ben Rodgers Patreon.
Oh, yeah. These are grandma's sweet potatoes. They go with a lot.
Okay, all right.
Yeah, appropriate ceremony required. Let's go down this path, though. Your palate runs toward the novel. I would say that it does, probably in more ways than just one. Give me some more examples. A, what do you enjoy about novel things, new things? And B, what do you feel like is the value in new things?
Are we talking just distillates, or are we going broader than that?
Oh, we're going to go broad before we go deep. So just use it as an analogy, I think, for everything that interests you, because you are that kind of a guy. You like to go find the interesting thing.
I'm a self-described Renaissance man. I mean, I think on the spirit side, just to start there, because it's a useful analogy, I love that someone's taken a risk, tried something new, and then I get to taste the outcome of it. And there is some randomness and divine hand along the way. They got the perfect barrel, great weather conditions, some really good fruit or whiskey, whatever to start with, not whiskey, but a beer for whiskey. I think it's really neat to be able to look at extremes in some ways to understand what the various doggles and tiles do along the way. And you, of all people, would understand that with your distilling habits.
Oh, yeah.
A good eau de vie is very nice, and you need to understand the inputs to that and what you have control over, what you don't. And then as far as that comes out to the rest of my life, actually, it's funny, I'm very traditional and I like to just kind of stick with what I do. I'm sort of a creature of habit in some ways, but that novelty always has an allure to it, but novelty for the sake of novelty is pretty empty. I think I enjoy things where someone's really put a lot of effort in and there's a great product coming out and I get to discover that. So whether that's a new shirt or an investment strategy or a whiskey, I think there's an innate desire as humans to create something, and particularly something tangible. I think that's especially strong for men. I think there's a lot to be said for the appreciation of things created by others.
It's fascinating because your business partner said something. He represented this other mindset. We asked him at an event last month to get up and talk, and someone said, "Why alternative investments?" And I'm going to ask you the same question, ask you to answer it, because he prefaced his question as, "You don't need to invest outside the stock market. There is no requirement to." I know there's great love of Nick in the room here, but I would love to hear you answer the question: Why alternatives? Why bother? I mean, we're all gonna go do these alternative deals. Let's just call it what it is. We're gonna take a different risk than maybe we've been programmed to think, right? So, like, if you grew up in the school of stocks and bonds, your brain works one way, and they've spent billions of dollars training your brain that way. And then you're gonna file an extension for your tax return every single year till the end of your days. And you're gonna have what? I think I filed like 6 tax returns last year, with all these different states and whatnot. It's a bit of a pain in the butt. That's my preface. Now, Mark Bathgate.
Plus one for regulatory relief. Keep
Yeah,
going.
there we go. Now, Mark Bathgate. Why alternatives?
Well, you don't have to do anything. You don't even have to do stocks and bonds. And I'm a big fan of equities. I mean, grew up in a public microcap household. Okay. That paid for my college, particularly post Sarbanes-Oxley. A lot of the best companies out there, particularly the high growth ones, have been pushed into private markets. And today you have a phenomenon where even still there's more capital available in private markets than public, and there's more capital than good companies. And so you tend to see valuations get bid up quite a bit. So I can make the case specifically for venture and growth around that, which we could get into. But on the whole, in a crisis, almost everything correlates to one. And I saw that firsthand in 2008 because I joined a hedge fund marketing firm that had an internal portfolio and was very well positioned. And we were, thanks to my former partners, up 12% on the internal portfolio, and our average client was up 10.5%, or our average place asset, right? And in a year where the average hedge fund was down 19 and the S&P was down 40, that was massive. And so we had cash in 2009 when other people didn't, and the whole world was on sale. And you thought you needed to be careful because you'd just been through an exceeding amount of pain, and we looked over the cliff into the abyss and fortunately pulled back because overnight lending markets in the US almost froze. And when that happens, the ATM stop, it's bread lines. So we were all still a little cautious, but frankly, it did not matter. Once the market bottomed and skew flattened, like in options 2 weeks ahead of that, in Q1 of '09, I think the market bottom was like March 9th or something like that, somewhere early March. Didn't matter what you bought. Just everything in sight, just buy it because no one else had cash. And so if you were one of the last people standing with liquidity, you made a boatload. And so the real reason to have alternatives in my mind is to take the vol out in an extreme event like that. And we may never see that again in our lifetimes, but I suspect we'll see something that rhymes. And also to add an uncorrelated aspect just overall to your portfolio. I mean, on the venture side, if someone had told me the NASDAQ 100 was going to compound at over 20% for 10 years, 10 years ago, it would have saved me a lot of pain and anguish. Not to mention all those K1s in the late tax returns. Like, really? I just have to dollar cost average into the NASDAQ 100 and I get 20%? Easy. And if you told me the Mag 7 was going to be even better, like, oh yeah, let's just do this. But, one of the hard parts for a lot of people is like, oh, this is moving up and down every day. Like, don't launch an equity portfolio daily. That's a terrible idea unless you're a hedge
Yeah.
fund manager. But there's value to finding things that are truly uncorrelated. Like one of my favorite investments is an electricity trading fund. It does not correlate to anything except weather, and weather is completely unrelated other than to cycles of the sun. And I don't think there's an investment around that yet. Another one, nat gas trading. We have credit card processing. which has, some macro pieces to it, but fairly uncorrelated. You can argue how uncorrelated or correlated venture is, but I think the growth piece and the access to companies that are going to be the next Mag 7 that will populate the NASDAQ 100 is an important piece of a portfolio, presuming you have the duration. And that's the key thing. For private markets, you got to have duration. If you don't, the ability to invest long, don't. Just stay liquid, which is just fine. And then, in the hedge fund world, I used to say 2% of hedge funds are investable. I think it's 20 basis points now, but that 20 basis points can be really valuable in portfolio construction. Electricity trading fund, very valuable in an overall portfolio mix. Same with the nat gas thing. I have a biotech long short. If you had just owned the biotech index, if you'd held on, you're now seeing recovery, but holy moly, that was one heck of a roller coaster.
Yeah.
Versus, this strategy preserved capital through the first half of this year and prior to that very well. And then when all these small and micro cap biotechs were trading as Graham nets, like zero value for their IP, presume they're going to destroy all the cash they have. He was able to go in and take a bunch of great positions. And now he's putting up like double digits every other month. And so that's what a good hedge fund does: preserve capital in a sell-off and then get paid for doing that when things recover. And, last I checked, we all have brains and hearts and lungs, and I don't think we're going to stop spending money on molecules to cure these things. But, in a zero interest rate environment, biotech became the ultimate investment to get to. And then the pullback from that, it's made nuclear winter look warm and fuzzy. So you don't want to be just, net long all the time, particularly if you're in a situation where you want to be able to draw off this corpus some. I mean, you're obviously not going to do that on the private market side, but for public markets, I think there's a high value to uncorrelated or low correlation liquid strategies. So there's my long case.
You're harping in on something that I think is fascinating, and I want to go just a little deeper into this concept that it can do different things for your money in the private world. You can get your money to operate differently. So there you go. There's an example. You can stick your money in, go long. Hopefully you've diversified a little bit, or you've got the right manager that you're sort of trusting to steward this, and you can wait a stupid amount of time and get a tremendous benefit. So that's a totally different, with a lot of kind of like dead space, dead air in between, right? So there's almost like a mystery pop at the end. And so like if you need to functionally forget about your money, or maybe have a generation of people forget that they have money, you can do that in the private markets. Like you can kind of hide it away and like, yep, it's over there. Just who knows what'll happen.
Right. Well, that's why endowments tend to have the largest private market portfolios, because their greatest advantage is duration. I mean, I have a friend that worked at an endowment and they issued a century bond, a 100-year bond, right? Because why not? If you're a university, and now you can argue whether liberal arts is going to last for 100 years, but nonetheless, you've been around longer than almost any other institution. There's a durable need for education. Again, we all have brains. Take advantage of that duration. And, private markets, venture especially, is probably the best way to take advantage of it. Now, you can also just end up owning a lot of private beta, which is not a great outcome. So you got to pick your spots.
But I think it's okay to realize too that you may want something different. So like what we were talking at this conference about fast money and slow money as a spectrum, and that, stocks and bonds is sort of the fast money representative. You can trade in and out. You could have a huge loss, but you can still get your money back. You just click the button. It's fast money.
Like the E-Trade, baby.
E-Trade, get it done. Boom. You know, I'm out. I'm changing my mind. And you can make decisions quickly. I mean, I did this. I have a very, very small public portfolio, but I did this a few weeks ago. I heard like a tip and someone's like, oh, this ticker that you're already, you're bought into that company. They have a better ticker that pays a better dividend. And here you go. And I just went click, click, bought. Now, in hindsight, that was stupid. I had like a great position and I was looking at, I got excited.
Well, you had an investment advisor who could have considered the tax implications of that rotation.
That's exactly right. Well, okay, so but there's another one too. Like we're trying not to sort of overly tout the tax advantages, but in public markets, your E-Trade, you don't get a lot of tax. You get what? Short-term capital gains and long-term capital gains?
Yeah.
Dividend income? Those are your kind of three taxable income?
Yeah, unless you own a MLP or something like that.
Yeah, but you're not getting any like benefit on taxes. You're getting taxed and you're getting hit.
Yeah, well, the great thing about public markets is you control when you trigger the capital gains, unless some sort of corporate event happens. And that's my argument against indexing. Indexes rebalance every year, so they're triggering capital gains that you just don't need. Versus if you own stocks outright, you decide when you want to trigger the tax liability.
But you're going to have one. I mean, if you do well, you're going to have a significant tax liability.
Ultimately, but you also can borrow against appreciated positions. So you don't have to sell.
Enter alternatives, though, again, and if there is a time to sell, there's all kinds of different strategies for taxes on in the alternative space. I mean, it's 9 ways to Sunday, the ways that you can use assets and depreciation, and I mean, for us, we've used intangible drilling costs to offset income. There's a lot of different levers that you can pull over in that other space. So that's kind of a money operating differently than what you're used to for you.
And that's part of why real estate is so popular. I would not put real estate in a alternatives bucket. I think it's a pretty mainstream asset class, but there's a lot of people that would.
It's a mainstream asset class, but there's a lot of juice in that squeeze, and at the public level, like if you buy a REIT, you're getting the last drops rather than the big juicy first squeeze.
I'll refrain from disparaging public REITs, but I will not. I think you're being generous.
Don't go on record as disparaging public REITs. You know, real estate's a great asset class.
This is not the comment you're looking for. Yeah, yes. I think public REITs are a generally inferior way to access real estate, but they serve a purpose, like most things do.
The big one that I'm harping on, and I will be accused of harping on this more in the future, I guarantee it. The thing that I like that you can create in an alternative investment is cash flow. That is a very unique thing. Like you can own a REIT and that gives you some result, or you could own a building in a town you know, on a location you know, and you're collecting rent every month and appreciating the value of the property. It's more of a headache, but you're making a lot more money.
Hopefully.
Hopefully. And then there's a land in between. I think of that as being kind of a neat thing that alternatives can do too. And
Yeah.
spark your curiosity. I mean, you're just telling me about a deal that is on its trajectory to going public, but technically right now, I could call you Mark Bathgate and say, "Hey, Mark, I think that company is going to be a great stock to own for the rest of my life. I would like to buy into that company before it goes public." That's an insane, insane opportunity. I don't think people realize that that opportunity exists on a widespread basis.
Well, it's a little fragmented, but particularly with the exchanges and all the SPVs that happen now. I mean, we get a lot of that exposure through funds that just do that. Great asset, stressed or motivated seller, and buy into companies that you're going to want to hold for a long time. So I think that's in a lot of ways the new microcap market. Although the company we're talking about is not even microcap. I mean, we're talking mid cap valuations, and that's the crazy part. Like these companies just don't go public anymore. They don't need to. This one will, in all likelihood. But there is a way to get in ahead of the general public in these things, and that can be very advantageous. It can go poorly too. I mean, the downside to private markets is they're not as liquid and you don't have as much information.
This is the other side of the depth side. Do you think people actually use all the information available to them? How do people make decisions? Like you've sat and watched people make hundreds and hundreds and hundreds, if not thousands of these decisions to invest or not. What drives that?
When I entered this space, I thought everyone took in all that information and made a cold, hard, calculated decision, objectively based off of all the knowledge they had. And what I realized after a period of time was, no, that's clearly not what's happening because the decisions being made do not match with the data that I see. But I'm sure I'm not seeing everything. So you step back and you realize, figuring out where an investment's going to go in the future is hard. That's pretty much a guess. That's an emotional decision. Okay, well, so, most investing is an emotional decision that people then justify with data, which is okay. We make lots of emotional decisions all the time. And there's situations where you have a lot more data, others where you have less. Some people are just brilliant at gut feel. Like, yes, that person is going to drive this business to an incredible level. And there's others who are very data driven. They say, okay, all the metrics we want to see are there. We're investing in this. I think both can be right, but you're still making some sort of guess about the future, which means unless you're delusional or have a crystal ball that I've never seen, it's an emotional decision.
In this world of information, so I think that's a leveling comment because you just said on a public company, you can go get all the information you want. And then you just said, but when you sit there and watch people eye to eye, the information plays a partial role and it's far from probably the biggest piece of what influences a person's decision. I'm curious how, as somebody who invests for yourself, but also walks alongside people, like you've got people's money that you help them direct and manage. How do you guide them through that process, knowing that at the end of the day, it's going to have to be a gut choice?
Yeah, I think that's a really tricky thing. I try to present as objective a case as I can with the caveat that I'm obviously endorsing something if I'm suggesting it to people. And if they bring up things to me, I want to be as sympathetic as possible to their idea to understand why that might be good. I might come to opinion pretty quickly. It might take me a while, but it's sort of a concept where people love their own ideas and often hate others. And that happens in investments a lot. And I think that's a shame. That's very much human nature. As part of that walk, it's understanding the emotional piece, being attentive to how excited someone is and whether that's in line with their normal itself. I know, particularly as a financial advisor, it's like, oh, yeah, you're really pumped about this. That's great. Let's put in half or a third of what you think you want to do because we could probably add more later, but that's meaningful enough that if it's as big as you think it is, great. We're all happy. But if it goes to zero, or maybe it's not that much of an impairment, but if you lose money on it, you weren't as upset about that. And I think half the trick as an investor is, how would my future self feel if I bet the farm on this and was wrong? And I'm overstating for effect, right? How would my future self feel if I didn't do this investment and it goes to the moon? Okay, what's a reasonable amount of risk to take? And by the way, can I price the risk correctly? That's the hardest part about investing, in order to capture this in a way that makes sense for me. And it's also a very personal decision, right? One family might really know real estate well, and they should press their bets when there's a rout in their local town. And, another might not know much about real estate, and it might be a terrible idea for them to go into real estate, even in a downturn, because they could still end up buying a lot of things that just aren't great assets, right? And I'm picking on real estate just at random. So I think knowing the client is key. I mean, in the end, my job is as much about human psychology as anything else. And that's really true with the investment managers, because I want to know who my counterparty is. It goes the same with a client, an investor. Like, okay, do you understand the risk you're taking? How's your future self going to feel? Do I have confidence in your ability to gauge your future self, or do I need to buffer that more? And what guardrails can we sort of put around this whole crazy emotional process we call investing to try and end up at a pretty good place? And, there's myriad variables that slot into that.
You and I, one of our early conversations talked about storytelling, and I know that you have a little penchant for the story as much as I do. I love trying to take a bunch of happy, disparate details and facts and try to put them into a narrative form. Do you use that skill as well? I mean, talk to me about how, let's just go say there's an opportunity in real estate that you think would be viable for a family that doesn't traditionally do real estate. How do you go engage that person? Do you just hear the facts? Real estate, yes or no? Or how do you guide them to the nugget without shifting what the truth of the nugget is? Does that make sense?
Yeah, well, I think any decent investor generally can take complex concepts and explain them in simple, understandable ways to other people. And so that's a form of storytelling. There is a joke. Let's not let the truth get in the way of a good story. Obviously, one does not want to obstruct the truth when looking at investment opportunity, but knowing what matters and distilling it down into the key synthesis, that's really important. And then conveying that in concepts that people can understand. If I try to tell someone about a new business that is very odd to them and abstract and difficult, that's hard. People usually can't attach to that. But if I can say, oh, well, and this is cliche, but this is the Uber of flying cars. You're like, oh, I understand what Uber is. I know what a flying car is. Okay, great. Like, I understand the simple narrative arc that you've given me. Tell me more. Or, no, that's a crazy idea. Like, I'm not going to do that. Right. And obviously there's much more to it, but I think synthesis leads to good narrative, which helps people understand. And there's immense value in that, because if there's one thing I'm super confident in, other than humans being emotional, is we're all very time poor, and it's not getting any better. And so having someone who can edit a certain part of your life, just like they'll edit out the stupid things I say in this podcast, like that's supremely valuable. And I think that will only go up. I mean, come on, what is a LLM doing other than giving us a synthesis when we ask it questions? Like, tell me about all the research related to autoinflammatory diseases, in the South. And what's it going to do? It's going to go scan everything that it's looked through and then bring it down to what seem to be the relevant points, generally what's popped up a lot across all that material. It's synthesizing and summarizing for us. It's editing. And there's a lot of power to that. I mean, one of our funds has an assay for pathologists, and it has 20,000 markers, and it overwhelms the pathologists because their assay currently has 4 markers. And they're like, I just want 4 markers. That's all I want to see, these 4. And what's interesting is that the 20,000 alone, not helpful, too much information. But when you can take that 20,000 and run it through an algorithm, and then the algorithm narrows it down to the 5 or 6 that matter, then you've supercharged the pathologist. And so everyone's like, oh, AI, AI, AI. It's like, no, we just like hired a computer editor. And hopefully our computer editor is doing a good job. We're relying on it. We don't totally understand how it works yet, which is why we call it AI and not an algorithm. But that's really what it is. So editing, I think, has supreme value, and that's as much as anything what I'm trying to do is edit stuff down to what matters.
People get excited about the thing they know and the thing they love. I see this on the fund management side, right? Everyone loves to send their pitch deck out, and the pitch deck is just, here's every little detail. Aren't you excited? It's a bias we all have. I mean, if you got me talking about my whiskey collection, we'd be here for 45 minutes and you'd be falling asleep. But I would just, oh, and this, that, and the other, and I could just keep going. Oh, and there's this detail. It's excitement. I get that and I get the passion, but I do find that there is limited capacity in the human brain, and it's a gift. So, like, if you said time is that incredibly precious resource. I had another podcast with Danny Burbeck, and we talked about attention. The entire world is trying to grab your attention, and a lot of the work that we do is we give people attention, and that's an incredible, I'll cross-link to that podcast here in the notes, but I almost think that the same concept happens with time too. It's like, I'm going to synthesize this to you as a gift. Here's a human synthesized, hyper complex. This is the nugget. I've put it in a narrative form so that you can then do the narrative thing that you just described, which is picture yourself in the future on both ends of the outcome, right? You have to be in a narrative state of mind to be able to picture yourself in the future, Mark, right?
Right. It's imagination. That's a storytelling in and of itself.
So you're telling me that in order for them to make a good decision, you want to prime their imagination while also giving them the facts?
Yeah, I think that's right. That's an excellent synthesis, Ben.
Go figure. Let's spend a minute talking about the latest synthesis you've been doing. You've got Distilled by 7.2, which is, I would call it a synthesis platform, but maybe you've got a cooler name for it.
I call it our best ideas club.
Ooh,
That's a synthesis.
Mark, tell me more.
Well, across 7.2, we have over 100 now different sponsors, which is it's too many to be fair, but it leads to a lot of fund opportunities and a lot of co-investment and other deal flow. And so I always have had people complain to me that I only show them one or two opportunities a year. And I said, okay, well, it's hard to find these things. And then it takes me 3 to 9 months to do due diligence, depending on how different they are and how busy I am and all that. So, I just can't go much faster than that. Well, suddenly I have a whole bunch of funds that we have done due diligence on that we know, and also the benefit of time just with my own relationships. And we have more deal flow and fund flow than we could do on our own. And so the concept is to take that, narrow it down to something like 10 funds a year, 15-ish co-invests, and make those available in an all-you-can-eat format for membership. And on top of that, we may do a co-invest vehicle as well, just to kind of give it people who don't want to pick and choose a way to sort of get the 7.2 index in this, or the Distilled by 7.2 index.
Oh, I like it.
Problem with that is then they'll really be able to judge us on our picking, and people will find out how dubious a decision that was. Right now, I have no attributable track record, which is perfect.
That's right. It's all potential from here. I will say, from the time I've spent with you and with the folks on the team, all joking aside, it's a very careful, thoughtful group of people who are able to understand other people's dollars and also understand their own dollars. And in various conversations with each of those partners, there is an extreme empathy. Like, it's different than a 20-year-old guy getting out of college saying, I'm going to invest other people's money. It's like, oh no, I've invested my own money in these things, and I've won and I've lost, and I've come to this place. It's a place of experience.
We do have a pretty good amount of scar tissue.
Danny and I were talking about this in that same other podcast, that one of the great signs of leadership is a people's ability to talk about failure and also celebrate success with equal gusto and humility. I think that's something that y'all exemplify very well.
And I'll take that as a great compliment.
Well, I think you should.
We're all going to fail. The question is, how do we recover from failure?
So tell me about that. If you could do a 2-minute synopsis of the Marc Bathgate philosophy of failure recovery, I'd be really curious to hear what you have to say.
I would say some of my recoveries are simply because I didn't know how to stop. I didn't know there was an option other than just to recover. Keep it was like, wait, you could just quit this? I was brought up at a household that worked hard, and you didn't quit. Listening to Freakonomics like I do now, I fail quickly. I could have quit many times along the way. So some of it was just that, but I think that was a really good muscle to build. And I think it's one of the challenges you have as a parent. Your kids need the ability to know that they can fail on their own and then recover on their own, because once they're out in the world, that will invariably happen. And I've seen this happen where if you have people who fail and They don't have the muscles. They don't know how to recover. And it's psychologically disastrous. I think that's part of the reason why therapy has gone up so much in demand. We've created bubbles around kids, and they don't get the chance to fail and recover under their own power anymore. We're too worried about what might happen to them if they do, and it doesn't build robustness. So, yeah, I think that's a critical skill to have. And as a parent, since I'm going to use that analogy, there are many moments when I want to intervene, and instead I try hard to hang back. They're like, nope, let them figure that out. As long as we're not going to lose a finger or whatever it is. Some might see it negligent, but I will intentionally not come out of my bedroom in the morning when the kids are up, particularly if they're up early. It's like, let's see what they do. Let's see if they can figure out breakfast on their own. What happens here? Like, how bad can it get? And sometimes I come out and the 8-year-old has cooked himself and his sister's eggs. And I'm like, good job, dude. Not sure how I feel about you, lighting the stove, but that's an important skill. And you do that. And other times I come out and who knows what creation has gone on. Or, Daddy, can we have breakfast now? It's like, well, yeah, you can. You guys know where the food is. You could have done it. I think that's a critical skill, maybe the most important one we can learn.
You brought something interesting up with the siblings, which is failure inside of community.
Yeah.
I'm curious, give me the 2-minute Mark Bathgate philosophy on how to fail graciously inside of community or inside of relationships. So, you could fail with family, you could fail with friends, you could fail in an investor advisor relationship, you could fail as an investor with a fund. There's so many times that we fail inside of community. What do you think of the hallmarks of successful failure in that context?
Well, one of my favorite pastors likes to describe life as failing forward. We are always failing, certainly in the divine sense, and an aspiration to approach a Christ-like state. And I think that applies in other relationships as well. My marriage is a great example. I'm always failing forward in that marriage. But when you bring humility to the situation and a view of yourself that is fair and is not self-loathing or beating yourself up, no negative self-talk here, but a realism around, okay, like I have culpability and I can make this better. And it's the knowledge that you can be the positive catalyst to recover from the failure. It's amazing to me the number of relationships I've seen where people just blow things up and walk away. It's like, really? That wasn't that bad. And I've certainly, done some dumb stuff, but I think I've prevailed by hanging in, staying humble, and also just being patient with people. Sometimes it's the other person who blows something up, and half of us be like, well, screw you, I'm gone. And you have to say, well, no, you don't know what's going on. It's hard to be them. Just be patient and be the person who's understanding when they come back around so they're not embarrassed. Because, pride is the most potent human emotion. And if you can dispense with pride, and by the way, who gets the credit goes directly with pride. It's amazing what you can do. I always say this to my wife. It's like the world would get a lot done if no one cared who got the credit. But, we're humans, and a lot of times our compensation comes from who gets the credit. And there are also people who will readily take the credit for things other people do, which is a shame. So it creates a scarcity mentality. And I suppose maybe the response to this is I like to think of failure as an abundance mentality, right? We will fail countless times, but we have the abundance of grace and the ability to recover from that failure as many times as we need to. There's only one terminal failure you're going to have, and that one you're not going to recover from. So make sure you don't do that. Well, I mean, we could talk about where you go from there, but certainly in this world. So I like to be optimistic. There's the Stockdale paradigm. Stockdale was the highest imprisoned officer in Vietnam. He was a 1-star admiral. So if you're imprisoned and you're the highest ranking officer, you automatically become the officer in command and you sort of determine the rules for all the prisoners. And his thing was acknowledge the brutal reality of the present while staying optimistic about the ultimate outcome. And I think that really nails it, but it accentuates the extreme difficult duality of being human. We are in the already, but the not yet.
That's why this podcast is called Add Depth and not How to Beat Your Chest 10 Ways to Sunday. I think it goes in the reverse too. As I was sort of picturing that, the humility of hardship, I think about the satisfaction of success from a humble place. Like if you're viewing success from sort of a greedy location, it's like ash, it hits your mouth and turns to ash. It's like, oh, delicious. What? I need more. That was one success. Now what's next? A pride-based approach to success requires more success. And so when you reach one goal, it's just a shallow goal and you go to the next one, you go to the next one, you go to the next one. That abundance that sort of keeps you afloat inside of failure is the same thing that enriches celebration of success. It feels like, oh, we don't deserve this success. Wow. I mean, we took a risk. We knew that this could happen, But wow, it did. It could have gone the other way. We knew that there was a chance it could have gone the other way, and it didn't, and we're grateful.
To be fair, some people do lose sight of the past in that success. But yes, I totally agree. I think the greatest triumphs come in the perspective of suffering.
Mm.
When you see it in the Bible, like Joseph gets to be ruler of all Egypt, effectively, but he has to go to jail twice for
Oh,
that and be left for dead by his brothers and then sold into slavery. Okay. He doesn't get to just suddenly become ruler of all with no pain involved. Jesus saves the world, but not without dying. So this is the story of the hero. I think Larry Arnn says it well. If you're going to do well in life, you must suffer. Suffer through the learning, suffer through the work, but it gives you the perspective and the resilience to push through with the hard things. And that's one of the things I'm always looking for in people. It's like, okay, when it gets hard, are you going to put your shoulder in? Are you going to work with me? Am I aligned with you? Or you're like, well, that cheap option expired. Peace, guys. Because I don't need anyone exercising cheap options on me. I got enough of that in my life. I want people who, when it gets hard, they put the effort in because they know it really matters and it's more than the money to them.
that is the kind of thing that just doesn't show up on a traditional due diligence questionnaire. That to me is like that intuitive, intangible piece that everyone seems to gloss over. Like, "Hi, person. Love your fun, love your concept. Totally see there's economic tailwinds, totally see there's political tailwinds. Good. Sounds like we could take some moderate risks to go make some good money in a way that works for us. Hi. Besides all that, what are you gonna do when the worst happens?"
You can't even ask the question because most of us have an ideal for how we will behave under
Mm.
that duress, but we really don't know how we're going to. Some of it is you just can't predict the duress of the future, but some of it is, we tell ourselves stories, right? We delude ourselves. We'd like to think we'll do better. We tend to go to our base nature when we're under duress. We see that in spouses, you see it in kids, and we're very programmed. Our psychology is from a DNA standpoint. I generally don't ask the question straight out. I ask a lot of questions around it, and then I go looking for situations where someone's been under some sort of duress to see how they behaved. And also, I try to observe how they behave when they think no one's looking,
Mm.
right? Or how they behaved in the past when no one's looking. And, there's these jokes about like going back to a high school girlfriend. But let me tell you, college is a great laboratory for understanding people because the way people behave in college and what their classmates think of them, that is extremely telling as to the nature of someone. Yeah, Zoom is great, fine. It takes me 10 to 20 Zooms to get the value of one in-person interaction, particularly if we go to a restaurant and I get to see how someone treats a busboy and a waiter and the interruption that goes on and the food that wasn't cooked to the right temperature that's brought out to them and all the other things. I mean, if I were designing a lab, I could totally come up with a whole bunch of stuff to test people and see how they respond to a bunch of, difficult in the moment, but not very meaningful hardships. And it would be extremely telling. I don't do that because, that would take more work than I probably have time for. But certainly taking someone into the lab of the real world and seeing how they respond to it is just very telling.
I find one of the traits that I love to see the most in people is self-reflective lightheartedness, where they don't take themselves quite so seriously. It's like, "Oh, you know,
Well, that comes from humility, right? True humbleness is knowing one's place. It's not being self-diminutive. It's knowing one's place in the world. And that's the mistake most people make. It's like meekness. Meekness is mistaken for weakness. Weakness is just, no, you don't have the muscle strength. Meekness is, I could kill you, but I have the restraint to not do it. Meekness is strength restraint. And so I think humility, knowing one's place in the world, leads to that attitude that you described. And it should bring some humor. I mean, the human condition is a sad one at times, but also a gratefulness. I mean, my goodness, we live in a world that if you look at sort of earnings of humans over the long history, it's just absolutely absurd. The greatest kings of the Renaissance did not have the wealth that the middle class American family has today. Okay, fine. 2 billion people still live in simple huts with dirt floors. But if you look at the data, it's amazing how a rising tide has raised all boats. I mean, worldwide poverty is at an all-time historic low, all time. There's still plenty of it, but it's incredible to think about how widespread means are now. And technology is likely only to make that better. Everyone's always worried about the jobs that are going to get eaten. I'll just point them to radiology to go back to a doctor thing. When AI started reading, x-rays 5 years ago, people were like, oh, that's it. We're done with radiologists. Well, now radiologists are even more demand because the AI gives them an early read. They look over it, review it, and then, send it off to the patient. It has supercharged their workflow. It's made them better and it lowers the price, increases the demand.
It's not all bad? Wait, the world's not all
The algorithms are coming for us, though. I mean, get your guns, Terminator.
prep up, baby.
No, I do not think it's all bad. It's all still a broken world, but I don't think it's all bad.
It's all broken, but not all bad.
Like I said, the already, but the not yet.
The already, but not yet. I'm excited for what you're up to. I think there's a lot of good things that you're well positioned to help serve people and care for them. Feel free to make a shameless plug here. I always love in podcasts how people are like, they kind of like ease the plug in. But to me, the At Depth podcast has to have a little nugget to it. Tell people if people are like, I got to have another conversation with this Marc Bathgate guy. And especially, you need to end with what brown liquid you're going to be consuming at that conversation. Go for it.
Here at 7-2, call now. No. If you want more than just equities and bonds, we can add a lot of value for you. We can help with equities and bonds, but the general theme among our clients is they have more money than they're going to need in their lifetimes, and we can help them do with it what they want. The one plug I'll make, which we didn't get to, is we have an initiative in brain health, which is really, mental health, neuro tech, and it comes out of a passion from multiple partners, me included, who have been affected by mental illness and other challenges. And that's a way where we can do good and do well, hopefully, by putting investments into brain health alongside philanthropic activities to really try and enhance the technologies, the therapeutics that we have, et cetera. We want to collaborate with good people, solve problems, and hopefully over time, change the world. So if that's something that sounds interesting, along with some wealth management and some fun alternatives along the way, yeah, reach out.
72partners.com.
Yeah, 72.co.co. I'll be the first to say if we're not a fit, and happy to recommend 2 or 3 other good people. But yeah, 72, the number 7, TWO.co. We definitely didn't think about saying this verbally. I think we do still have 72partners.com spelled out. That might be easier.
I happen to know a wonderful firm that has helped people develop brands that function in a variety of formats.
I would love to talk to that firm.
Yeah.
We need some help there.
Pivotal.com is where y'all want to head for that solution. There you go, Marc Bathgate.
Wait, how do you spell Pivotal?
Pivotol, because it worked with the logo. And it's the most common misspelling of the word pivotal. Did you know that?
I did not know that.
Yeah, and people love to swap the ending A with an L. So there we go. That's where pivotal came from. Common mistakes can become wonderful things.
They often become words. It should be toward, not towards, but towards we accept as much as toward.
We do now. Grateful for this time. Shameless plug as well. We're big fans of 7.2. Cove Pilot is actually engaged with, I guess 7.2 serves us in a consulting capacity, if that makes sense, and helps us make investment decisions. We also love to aggregate people's dollars that can't necessarily make the minimums for some of these investments. So we've got a wonderful vehicle for putting a bunch of us little guys together to become a more substantial investor in people like Marc's kind of deals.
And we love that.
We like the fact that Marc going to dinner with people with that kind of philosophy is a part of the due diligence process. And I think a lot of people don't know how to express that that's important, and I think there's a ton of people who don't think it is. So very aligned here. Very fun to have this time with you, Marc. Thank you. Thanks for being on the podcast.
Thanks, Ben. I was all ready to ask you questions, and I feel like I ran out the clock.
My gift to you is my attention. I really wanted to give you my attention, and I hope other people are really, inspired like I have been for the last 55 minutes. So thank you.
My pleasure. Thanks for having me on.
This was a fantastic conversation with Marc Bathgate. One disclaimer I'll make is that none of this can be considered investment advice. And thank you so much for taking the time to listen and go at depth with me and Marc. If you want to learn more about alternative investing and how to meet people like Marc Bathgate, just shoot me an email, ben@pivotal.com. Thank you so much for joining us today.